and welcome to Sibos 2025 in Frankfurt. I'm Hannah Wallace, and joining us in the Finextra TV studio now is John Hutton from LexisNexis Risk Solutions. John, great to see you. Thanks for joining us.
It's great to be here.
Great to have you in the studio talking about improving payments efficiency, a really big topic at Sibos especially. I want to begin our discussion looking at the common causes for payment failures and what needs to be done to reduce payment errors, but also improve STP rates. Yeah. So we'll begin there.
Okay. Well, you mentioned STP rates, which is ultimately banks try to get to the highest levels of STP rate, aiming for 100%, which is ultimately the holy grail, because anything less than that will ultimately have a cost, not just to the processor, like the bank or the payment processor, but also to the customer. So we think about the impact of those payments not getting through to the intended beneficiary at the first try, then somebody's not getting their money, and that customer impact can be really, really bad.
And what about the banker's almanac? What part does that play in helping institutions validate failed payments, but also reduce the friction of cross-border transactions? What's its role?
Well, Banker's Almanac is ultimately a portfolio of products through LexisNexis Risk Solutions. It's been around for 180 years. In fact, this year it's 180 years anniversary. It started in 1845. If you think of the fact that we have been the backbone of the payments industry with this set of products for all of that time and evolving, we know inside and out what is required to get a payment from the sender to the intended beneficiary. Now, Banker's Almanac can provide a lot of different data sources because ultimately the data is king. So if you don't have the right routing information, for example, when you set up a payment, then it's not going to get to its intended beneficiary. And that's where some of our file products that provide all of the kind of, let's say, address information will help with that process.
Well, thank you for bringing us up to date. And we can't speak on the subject without talking about emerging technologies such as artificial intelligence and automation. What role are they playing in helping reduce failed payments before they've even occurred, perhaps?
Yeah, well, artificial intelligence is kind of the badge for what we've historically known as machine learning, which has been around for quite a while. So those two sort of technologies, let's say, can help with reducing manual, labor-intensive type processing. But ultimately, what's really, really important is that the data is correct. Because if you don't have that correct underlying data, then the result won't be what should be intended, which is to have the payment go from the sender's bank account to the beneficiary's bank account. Now, you can put in any algorithm, you can put in any tool, the result you will get will be only as good as what you've managed to put into that, which is key. So with the products that LexisNexis Risk Solutions provision to our customers, we have the best data sets available. We have undeniably some of the best STP rates that are available through the use of our products, which is absolutely phenomenal. And I always say that payments ultimately is the backbone of the world. If the payment doesn't go through, the business stops, the economy stops, and therefore it's essential that banks, customers, businesses have the right data to support them, and Banker's Almanac provides that.
It's interesting to hear what LexisNexis Risk Solutions is doing in this space to help as well. And now coming to the crystal ball question, as it were, what innovations do you foresee making a big impact in this space?
I mean, if I knew the answer to that, then I probably wouldn't be sitting here. And I wouldn't say it's any guess, is as good as yours or mine or anybody else, but I think that innovation is a stepped process. So we have to continue to evolve rather than, let's say, revolution in the payment space. We have stablecoin, we have DLT, distributed ledger technology coming through. We have a never-ending discussion around reducing friction and cross-border payments and cost and so on. And I think there's going to be a convergence of technologies coming quite soon. And we see with what Swift have announced, and we see with that DLT technology. But it's not going to be applicable to all use cases. There's still going to be retail use cases, there's going to be individual sort of trade use cases, and I think there's going to be a great choice for customers ultimately at the end of it, which says, for your business, here's the right payment type, the right payment rail, and the right way of processing that's applicable for you and your business.
So watch this space. It's certainly going to be the customer that benefits at the end. John, thank you so much for sharing your insights on this space. I'll let you get back to Sibos to share them with the rest of the delegates, but thank you very much.
Thank you, Hannah.